So okay, at the moment we are going to be looking at the mindset that you need to have, the logic that you need to have, because what you need to know is that trading is not only about strategies, but it only requires psychology. It only requires the way you look at things, the way you think, the way you reason as a trader. So that is what is going to make you a better trader. Not only having the trading systems, you can have the trading systems and the psychology is lacking. The way you look at things, it is lacking. So I'm just going to give you just a quick video where I will be just showing you or describing to you how you should think as you approach the market, how you should approach the volatility index market. So what you need to know is that, okay, as I said in the previous video, that okay, this asset, it is an asset, or a synthetic asset is an asset that is created for big investors, for large investors. So what you need to know is that it is guys who are going to be putting in a lot of money. So it was created for guys who are going to be putting in a lot of money. So now for you to fit in the market, you don't just need to have a lot of money, but the thing that can save you, it is having the mindset of the guys who have a lot of money. So I hope it is making sense. It is to actually have the thinking that those guys have, because money, it is just numbers, it is just figures, but the reality, it is the mindset that you have when you have that large amount of money. So what is going to save you as a retail trader, it is having the same mindset that the guys who have money, because these synthetic ETFs are actually created for guys who have a lot of money. So what will make you to be like them, it is not actually having the amount of money that they have, but it is actually having the same mindset that they have. You see, so once you share the same mindset, once you share the same thinking, so then you are like them, you are the same, because money is just numbers, but the reality, it is the mindset. So okay, I will just quickly take you into my screen. I just want to make up your mind a bit, so this information will also help you in everything that you do, whether you're trading stocks or whatever asset. So this part of mindset. So let us just get into my screen. So okay, we can see here that we have a volatility 75 index. So the first thing that you need to know, for you to be part of the guys who are investing a lot of money, for you to have that mindset, you need to know that first, what you need to consider, it is to make sure that you do not neglect higher time frames. You do not neglect higher time frames. So that's the first thing that you need to have in your mind. It is that when the big guys let me just do a drawing. When these big guys are trading in the market, what you need to know is that these guys, they are trading in the bigger time frame. They are trading in the bigger time frame, not in your smaller time frame. So that's why I say you need to have it in your mind that okay, I need to have the mindset of a higher time frame. I do not say you have to use a higher time frame, but what I said is that you should make sure that you consider whatever that is happening in your higher time frame. Make sure that you keep it in mind. So this is just the first thing that you need to put into practice. Make sure that whenever you take your trade here on the 30 minutes, let's say you want to take your trade here on the 30 minutes, you need to make sure that you consider the time frames which are higher than the 30 minutes. Maybe you can skip a time frame, like skip the 1 hour and go to the 4 hour, or you can just look the 4 hour. There is no problem even, the 1 hour, there is no problem even about that. So let me just quickly look at my charts and refresh it. Okay, so what you need to put in mind is that okay, then now before I take a decision as a retail trader, the first decision that you need to take the decision firstly in the hard time frame and say, okay, now I am trading. What am I going to do in the hard time frame if I was trading in the hard time frame? So then let's say maybe you look at this market. You say, okay, that price have been going all the way down. So it is also in a support level, meaning it is support changing and becoming resistance. So I'm looking for selling opportunities. It is in the hard time frame. Then when you go to your trading time frame, which is the smaller time frame, or maybe the 30-minute time frame, when you go back there to the 30-minute time frame, what you'll be looking for, it is going to be looking for a selling opportunity, meaning now you are taking the decision from the higher time frame to your lower time frame. Why is it so that you can also benefit when it comes to holding your positions, because you'll know that, okay, I've entered it from the highest perspective, so I will not just be entering and closing quickly, but I have an opportunity to keep on holding my trades as the market continues to go, because I've entered in the hard time frame. So that is also what you need to be thinking in your mind. And the most important thing is that, okay, when you are a big boy, let's say now you are the big boy, you are investing with a lot of money, with billions and billions. Now, just keep this in mind, okay? If you are a big boy, let me just clear my screen. If you are a big boy, let's say you are this guy with a lot of money. So now you get a report, and the report says, okay, maybe in 5 years to come, let's say in 2025, as we analyze, we can see that the economy of Swaziland will be very, very high. So I'm making an example with my country. Let's say the economy of Swaziland on 2025. In 2025, the economy of the country will be very, very high. So now you need to think as the big boy. So what is the big boy going to do? The big boy is going to take all his money at this moment right now when the economy is here, and he will be buying all the buildings in the city. He will be buying all the businesses in the country. He will be investing everything. So now as the economy goes up, now when it reaches 2025, now everything will be expensive, everything will be of high value, So now the retail trader, that's whereby the retail trader will say, okay, now I'm beginning to buy, let me invest on this business because I can see that it is improving. Let me invest in real estate because it is now improving. But then this guy here who invested in 2020, at this time on 2021, he will be selling his businesses. Now he will be making money out of it. But then the others will be saying, okay, now I can see that the real estate industry is booming, so let me buy and invest in it. But the guys who purchased it before, they are now selling it, meaning they are making money. You are still starting, you are still buying, you are losing money. Them, they are already making money. So when they sell everything, you need to know that that's where it will also drop. That's where the value will drop, because now there are a lot of sellers than the buyers, so the value will drop. When the value drop, you will say, hey, the market is always against me. But the question is, did you think like the big boys, or you thought your own way? So you need to think like the big boys, that okay, I can see that the market is very, very low. It is now very, very low. Let me buy it. Let me not buy it when it is high. So they say we should follow the trend. Yes, it is good, but you need to know when to follow and when not to follow. So you need to make sure that you begin the move. You invest while everything is flat. You invest while the economy is down, so that when it goes up in with you inside the money. So when it is up, that's where you'll be selling. Now you are making returns, not buying, you are selling when it is up. So that's the mindset that you need to have as a trader.